Good morning everyone and welcome to Moneycontrol live stream. You're watching the opening bell and I'm Santosh Nair. Well, it appears to be a bearish start for the day going by what the SGX Nifty futures are indicating at this point in time, and in pre-market the Nifty is trading slightly below the 18,000 mark at this point. Overnight US markets ended on a bearish note, and at this point Asian markets are trading firm. Overall, the mood back home is quite bearish as the Nifty has been struggling to sustain above the psychological 18,000 mark now. In the FNO section, we are seeing long build up in the futures of Havels, Apollo Tyres and HPCL, and at the same time we are seeing short positions being built up in the futures of PVR, AU Bank and Info Edge. Well, and in today's opening bell, we are now joined by Digant Haria, who is the co-founder of GreenEdge Wealth Services. Now, Digant has been closely tracking the banking and financial services spaces for over a decade now. He's been a credit analyst at Axis Bank and JP Morgan. He's also been a sell-side research analyst for the banking sector at ICICI Securities and Antique. So, Digant, welcome and glad to have you here with us this morning.
Thanks for having me, Santosh. Thank you so much.
Yeah, Digant, so I would like to quiz you on Bajaj Finance, the stock which was in the limelight yesterday. Huge sell-off there after the company announced its third quarter business update. Now, what exactly do you feel could be the reasons for the market disappointment? Because on the face of it, the update did have quite a few positive points as well, especially the 27% growth in its assets under management.
Right, Santosh. In isolation, 27% is not a bad number. But if we take the last 40 quarter history or 10-year history of Bajaj Finance, they have been used to saying that we'll grow at 30%, but they always grew between 35 to 40%. So I think the street is somewhere, anchored to that, 30% plus kind of a number. Now even if Bajaj Finance, the management themselves say we will grow between 25 to 27%, and they have delivered 26% in the last quarter. So that is something that the investors are disappointed about. That you have a festive season. That October, November, December are typically very strong in terms of the festive season, and Bajaj Finance typically does very well. So I think that 26-27% growth has come as a wake-up call to everyone that, okay, now if the Bajaj Finance management is saying 25 to 27%, we have to take that number and not what the past, which has been, which is 35% kind of a CAGR. So I think that wake-up call is there, and which is why, that violent reaction happened despite that 27% kind of a growth number.
Now, Digant, do you think this could be specific to Bajaj Finance, the kind of slowdown that we saw during the festive season, or this could have been the case with other NBFCs as well?
I think, this slowdown is there. If you look at, companies like, say, a Whirlpool, companies which are working at the entry-level electronics item, they'll tell you that we are seeing a slowdown in the entry-level products, but the premium products are still doing well. So I don't blame Bajaj Finance completely for the slowdown. A little bit of slowdown is there in the, the next 5 crore families. The top 1 crore families in India are doing quite well, but they buy premium products. They are not customers of Bajaj Finance. But I think the next 5 crore families, they are quite affected with COVID, inflation, and the slowdown is very much there. But, beyond this slowdown, there is a huge competition from credit cards, from fintechs, from banks. Like, you just rewind back 5 years back, there was very little competition from credit cards or debit card schemes or, all these BNPL, buy now, pay laters of the world. So competition has also taken, its toll on Bajaj Finance, along with the slowdown in the segment itself.
So, let me just step back a moment, Digant. Now, can you take us through what exactly is the business model of Bajaj Finance and how has it managed to make superior returns for many quarters in a row? You just mentioned that growth rate which has been far ahead of what market had been expecting. So, how did it get there in the first place?
Yeah, so, I'll go back to 2010. These were the days when, data was not really available on the retail consumers. The only data which we had was CIBIL, and that too, all the banking, the elite banking customers, the salaried class, data was available only for them. So Bajaj Finance thought that, okay, these are not my customers, but then there is that next 4 or 5 crore young aspiring middle class who really want to consume and who want to grow in their life. Let me try and capture data of these people by giving them very small loans and then tracking the repayment behavior, tracking their bank accounts, tracking their expenditure and so on. So Bajaj Finance started with just giving 30,000, 40,000 rupees for mobile phones, televisions, all these products which an aspiring class would buy. They will buy all the premium or the affluent kind of products. So Bajaj Finance added like 5 crore customers in the last 8-9 years. They did a lot of analytics on this. How is he repaying? How is his income going up? What are the other loans that he's taking? What is his consumption pattern? So I think Bajaj Finance built its own credit bureau, if I have to say that. So that was something which was pioneering in the industry. And then once they know that, okay, out of these 5 crore customers, if these 50 lakh customers are really showing good credit behavior, I'm going to give him a personal loan of 5 lakh rupees. So, from a 30,000 ticket size in the first cycle, I have gone to say a 5 lakh ticket size in the third cycle. And here there is no sourcing cost. So I earn very high profits on this particular customer when I'm cross-selling something to him. And which is why Bajaj Finance is able to generate 4.5% ROAs in the industry on a book which is like 2.5 lakh crores. So that's something which is a miracle of the sorts, because they captured that white space which the banks did not think important in the last decade.
So now what has really changed for Bajaj Finance? How is the market different from what it was earlier, and how does that affect Bajaj Finance?
Yeah, so I think, see, one is that data availability has improved for everyone. Like today, if I start a new NBFC, I have 10 or 12 different data stacks through which I can get data on the customer. So now data is no longer the monopoly of Bajaj Finance itself, which was the case between say 2014 to 2019. Data is freely available. Second is the banks have realized that retail, this is a lucrative business. Banks have got aggressive. You see players like HDFC, ICICI, IDFC, a lot of these banks which are trying to capture the spending of the middle class or the higher middle class. And then thirdly, I think there is this entire fintechs which are also trying to cross sell. Like, Paytm may have crores of customers who are there for the payment services, but slowly and steadily it is trying to sell loans, sell some other products. So competition is surely coming in for Bajaj Finance in this decade, and the segment itself is slightly slow because, as I said, that customer set has suffered COVID and they have suffered inflation hit also. So I think both the things are hitting Bajaj Finance, and third is the size has gone up. So maybe the 35% growth which we saw in last decade, we have to contend with something between a 24 to 25% kind of growth in this decade.
So Digant, there's also been chatter that at some point Bajaj Finance may have to convert itself into a bank. A, how credible is that chatter, and B, were it to do so or not do so, what are the implications?
Yeah, I think, see, in the past we have seen that, see, RBI is a very, very proactive regulator, and systemic stability is in the forefront, like that's the number one priority of RBI. So once you attain a certain size, RBI is going to coax you to become a bank. I think Bajaj Finance with 2.5 lakh crores is the second largest NBFC after HDFC. And now we see that HDFC Limited will be merged with HDFC Bank. So HDFC Limited effectively has gone into a banking kind of structure, which is more regulated and, more supervised, more monitored. So there is a lot of merit to this chatter, Santosh, that Bajaj Finance will be coaxed to become a bank. It's just a matter of time, maybe 2 years, 3 years, 4 years, not easy to speculate when. But it's just that, it is going to happen sooner or later. And when you become a bank, these 4.5%, 5% ROAs which you have currently, they will compress to something like 3.5 kind of a number. So I think all these things definitely tell me that, this decade is not going to be as hunky-dory for Bajaj Finance as a stock and as a business as last decade was.
Well, we'll take a short break for the markets at this point. The Sensex is up 72 points in early trade. ONGC among the gainers in early trade, up by close to about 0.6%. The Nifty is just above the 18,000 mark now, up 23 points over its previous close. Market breadth fairly strong, around 14 1,438 stocks on the NSE are trading higher compared to 673 stocks which are down at this point. The Nifty mid cap is flat, just about 0.1% up, and the Nifty Bank, after 2 days of heavy selling, is up in early trade. Well, getting back to you, Digant, now after the huge sell-off in Bajaj Finance shares, how is the stock looking from a medium-term perspective? Do you feel that probably it could have something for bargain hunters?
I don't think so that there is a lot for bargain hunters right now. See, what's really happening is that expectation reset is happening, from a 35% growth regime to a 25% growth regime. And the stock has gone up, stock was trading at 40 times earnings because there was this 35% kind of a growth rate expectation. Now, let it come down to something like 20-25 times earnings. So, my FY25 calculations tell me that, the stock is at 20 times on FY25. Axis Bank is at, say, 11 times on FY25 earnings. So, I don't think the stock is ready to just start running again. Another 6 to 12 months, it will spend time consolidating in this whole new earnings expectation band, which is the 25-26% kind of a band. And after that we can take a call. I think Bajaj Finance gave such a great performance last 10 years. The company is doing all the best it can, but it's just that the weight of expectations was so high that we'll spend around 6 to 12 months in adjustment of the valuations.
Now, interest rates have been rising for a while, and they also seem set to rise some more. What implications does this have, Bajaj Finance in particular, and also the NBFC space at large?
See, when the interest rates are rising, players like Bajaj Finance generally benefit because they borrow at a very low rate because they have a very high credit rating. And on the customer side, it's easier for them to pass on because they are dealing in small ticket sizes. So they can pass on those interest rates. I think for all the good NBFCs, okay, be it Chola, Bajaj, Shriram, Sundaram, rising rates is not a very big problem as long as the rise is, say, 50-100 bips a year. So that the customers can absorb it. But for people who do not have great liability franchise, someone like an IndusInd Bank or someone like an IDFC, for them, I think the rising interest rates definitely is a challenging time, but not so much for Bajaj Finance or the prime AA kind of rated NBFCs.
Well, looking ahead in 2023, Digant, how do you view the NBFC space? What are some of the key challenges and opportunities that you see for the major players in the sector?
So see, I think for all the players adopting to this new tech world is going to be really important because see, most of the large NBFCs, they have a very good balance sheet, they have good borrowings, and they have good lending and collection skills. But I think they will have to digitize a lot of their operations. Bajaj Finance is right at the forefront. Maybe Cholamandalam is second when it comes to digitization. Most of the other NBFCs are slightly behind. I think they'll have to accelerate that kind of spending. So that is one big focus area. Apart from that, I think the demand is going to be quite robust because our domestic economy is doing well and NBFCs are linked to the domestic economy. And on the thematic side, I think the super expensive NBFCs, the ones like say a Bajaj Finance, Chola Finance, Aavas, Aptus, all these companies may give you that 25% kind of growth rates, but then there are some other NBFCs, something like a Shriram or a Canfin, which are trading at much lower multiples. They will also, their growth rates will actually improve from the 10-12% we've seen in the past to 15-18% going ahead. So I think the action is more going to be on the value spectrum of the NBFCs. The growth or the expensive spectrum of NBFCs, I think this 1 year is going to be a lost year for most of them. So I think for investors, the focus should be on the value part of the NBFCs where, some real good action can happen.
Well, plenty of interesting insights there, Digant. I'm sure our viewers would have quite a few points to take away. Thanks so much for your time and joining us this morning on Opening Bell.
Thanks, pleasure, Sam. Pleasure.
And well, with that, it's a wrap on this episode of Opening Bell. Thank you for watching, and we'll be back with you again at 3:30 today.